Hello, today is Friday, 11/11/11, and welcome to today's silver video and some technical analysis. It's been very difficult getting inspired to do these videos of recent time frames lately. A lot of nothing, at least within the charts, have been going on. It's been a very much of a cool slowdown period within society over the last so many weeks. Now, as far as the charts are concerned, I've drawn an uptrend line in here which connects the most recent points, two straight lines, one roughly at around high $32.33, which is resistance, now becoming that of support, and then this line here, which is below this 36.15 mark, because that's something it didn't do, was go right up to 36.15. No, it was a little bit short, but since that point it has found this higher low. That's what's really important, is to maintain the pattern of higher lows. So the last low here is higher than this previous low. So again, the more often you come back to resistance, if you're making higher lows like this, it increases the chances that you would take that significant level out. Once it can confirm or break a hold above here, well, that should mean that the bias would be moving to the upside. Now, the last time we confirmed a move up around this two-thirds retracement area and held above it for a long time, the market caved in, because the last time it already had a nice confirmation hold above the 38.11, which was the level that was used before then. Actually, it was 42. Yeah, 42. Okay, so forget I said that, but I actually have remembered a significant time where it has happened, where it's gotten above this second line and had a nice confirmation, and that was also a cave-in too. We'll get to that in a second. The big thing within Fibonacci is you have the high and you have the low. Now I have a situation here again where I have a high of 44.22. So quite frankly, that isn't going to cut it. I'm going to need to know what the Fibonacci is from the $50 high. Therefore, the Fibonacci levels from the $50 high and the $26 low has the first level on the upside at that of 33.41. When it originally bounced from this low, that is exactly the direct area for which it managed to find some resistance. Came back down within the higher low, thus we have this uptrend, has broken above this key Fibonacci, and now for the last 3-4 periods, which is a couple of weeks, 2.5 weeks, it has been holding this significant level as support. So I'm going to say the same thing I said within the daily chart. And that is, if it can manage to break past this resistance here at about 35.5, that it should have a pretty fast move up to this significant point where the odds would be likely to have some degree of resistance. Keyword some degree. Could be correcting through time, could be going lower. That's just the odds. And normally when you break through, it's a significant candle size, sort of like what you see in here, that would take us directly to this area. And then on a bullish side, you want to keep the higher lows pattern going. So the most obvious spot with this previous resistance to become as that of support. Once it can get above this 38.91 area, we'll say 39, just to be a little bit easy, and confirm that it is going to hold above this, which is spending a few periods above it, really not going below it or much at all, that it looks as if the bear run would be over and we would continue the bull market that we were previously in. But for now, as long as it's been within this line, price action states the market to be that of neutral. Now off to the quarter day chart and the long version of this going back to February of this year. Now I was stating a little while ago that whenever you have a situation where you have a confirmation above a 61.8%, that one of the last times I've seen it, it really did cave in. And that was from this low and this high. When it came down back in the end of April, the significant Fibonacci was right at this line and it went right above it, and it held it time frame for about 15 periods or so. There is absolutely very little of such a degree. The volatility on the top end is in that of a downtrend within the front weighted average of the last 5 and 20 days. The blue line is a front weighted average of the last 5 days of volatility, and the orange line is front weighted average for the last 20 days of volatility. And this thing as well is breaking down lower. The big selling moves usually occur when you have great volatility. The large volatility on the upside is very rare, but at some point, I would expect this to be the case. What I'll be looking for is this 5% level. That's the big, big mark because it's normal to have your every day, every so often moves in a 6 hour period. That would be 5% from the lowest point to the highest point. As we can see in here, it's happened on many occasions. There's been two periods where it has broken out past 5%, and that was both selling situations where the market's pretty much tanked. Therefore, when you have a situation within a dollar collapse or a major silver breakdown, trying to figure out when is fairly or pretty much impossible, that there's a good chance that there will be one move that would bring us above this on a bullish case. But what I'll be looking for is support to be found at 5, which will then bring us back to 10. So there, that means what I think or what I would expect this to happen at some point is for this to move to around the 10% or greater, which is 10% moves in a 6 hour period from the lowest to highest point. Then to come back in here and then make another move to where it previously was after coming back down to the 5% variable. I was looking at it back in here. We can see at this point in here, let me just change the color from black to say red. And here, that it was coming back down to the 5%, and I was analyzing it, looking to see if that was the case. Obviously, that wasn't. So, thank you for tuning in to this Friday video, and have yourself a great day. Bye bye.